What's new in retirement for January 2025? Hey, you guys liked the initial December update on this so much. I think I'll turn it into a monthly video. How did you guys do so far? How are you doing so far in January? Where am I? As of January 18th, 2025. How you feeling about this coming year, guys? I'm feeling pretty good. No matter how you voted for, if you voted for the new administration or not, I'm feeling good. I think it's going to be a good year. So, what do we got? As I stated in the video last month, these are some of the stuff I look at on a monthly basis to determine what I'm going to do in retirement. If I'm going to change what I'm looking at, if I'm going to change how I'm funding, or excuse me, not funding, how I'm allocating my resources in my retirement portfolio. Now, most of the time, 90% of the time, probably not going to make a change, but it's always good to look at these different parts of the economy, parts of how businesses are doing, just to get an idea of how we're doing as a whole. Guys, leave me comments. Leave me comments. How are you thinking about 2025? My stand's a little wobbly here today. Hopefully it's not bothering you too much. How you think about 2025? How you think we're going to do? Leave me some comments. Very curious to your responses. So here we go. What I've got up here is how we did in December. Okay, so I'm going to be going through each one of these and where we stand in January and whether or not that means anything to us. Hey, for those of you watching me for the first time, my name is Duane, and this is a retirement channel for people on moderate income. If you think you might like that, think about subscribing and like the video. And if you really like it, down below, you can further support this channel by number one, buying me a coffee, or number two, buying my new book, the dark comedy slash thriller, The Monster Who Loves Me, for $3.99. So here we go. The Dow. How do we do in January? There we go. We are up so far in January on the Dow. That is this last week, and again, I'm filming this on the 18th of January, was the first, what am I looking at? The best week since November. You guys remember November? November was a good month, right? Good month. This is the best week since then. December, not too much. December, I was thinking about ending it all. So that's good. S&P, how are we standing on the S&P this month? Up again. So going into January, we're looking pretty good. We're looking pretty darn good. Inflation, how are we doing on that now? Inflation jumped up a little bit so far in January. Now, the Fed is targeting a 2% inflation figure. So we're up a little bit in inflation. Is that going to do anything for me now? No. Now, if that would have been instead of 2.9, 3.9, yeah, that would have made me think a little bit. Fed funds rate, don't need to tell you that. It's the same. They haven't changed that. The Fed funds rate is what, if they're going to change an interest rate, that's what they're changing. It's called the Fed funds rate. It's how when banks borrow money from each other back and forth, that is the rate they are paying. Currently, it's between 4.25 and 4.5%. That has stayed the same. Okay? The 30-year fixed, where are we at now? 6.67% on 30-year fixed. That has decreased for the fourth day in a row. Okay, so that's pretty much where we were, right? So if you guys are thinking about getting a house, like let's say downsizing for retirement, might not be the best time to do it, unless hopefully you'll be able to pay for that all in cash, right? If you're thinking about getting a loan right now, not too good. When I got a loan on this place in 2022, early 2022, I think I got 30-year fixed for 2.75. It was in between that and 3. That was a good rate. That was a good rate. So right now, if you're thinking about downsizing, unless you're going to pay in cash, I wouldn't do it. Okay, let's jump to Treasuries. Where are we at in Treasuries this month? Now, these haven't changed too much. We've got the 6-year the 1 year or 6-month, 1 year, and 10-year treasuries. As you see the rates there, haven't changed too much. That's still a pretty good deal. If you guys are looking to put your excess cash into something, I highly recommend treasuries. I have been putting my excess cash, the bulk, when I do my monthly updates, when I show the cash column, the majority of that I will have in 6-month T-bills. I've been doing that for the last 2 years. So that's a pretty good return on your rate. And if you guys are worried about the stock market, bonds, all that kind of stuff, if you're comparing bonds to stocks, and especially if you're comparing treasuries, US treasuries, that's one of the safest places you can have your money now. You are backed by the US government. So the chances of those things defaulting, not very high, right? Not very high at all. I highly recommend T-bills, highly. So CD rates, where are we at now? Money markets, where are we at now? And online banks, where are we at now? There we go. As you can see, not much change, right? Not much change. These are also an option where to keep your excess money. The last thing you want to do, guys, is just be sitting on your money in a mattress. Or if you dug a hole in your van down by the river. Yeah, you don't want to be putting your money there, right? At least get something, especially for those of you, if you're not into CDs, if you're not into money markets, at least put your savings in an online bank. Look at those rates, 4.5 to 5%. Compare that to what you can get to with a normal brick and mortar bank. I still have a little bit in my brick and mortar bank, but I don't have anything in an online bank right now. Like I say, I do treasuries, but why not? These are all good options for you guys to just have your money do something. Look at inflation, 2.9%. At least you'll be beating inflation for the near future by putting your money in something instead of just leaving it, number one, in a brick and mortar bank, savings, or hiding it on your property. Gold doubloons. Okay, home prices, where are we now? They are still going up. Last month, up 6% over the year. Now, up 6.3% over the year. Okay, not a big change. As you guys know, the housing market, man, it's all over the place, right? It can be all over the place. So in this case, not a big change. Median rent, same. Hasn't really done anything. Might have gone up by a couple dollars, but not enough for me to put down on these figures. Okay, so gold, the price of gold bumped up to $2,704 an ounce from $2,587 of an ounce. I don't have anything in gold currently. May in the future. It's over, let's say, a 30-year period. Gold fluctuates, but also so does the stock market. And finally, we come to our good friend, Bitcoin. Where are we at on that bad boy? Last month it was 103,000. Now we're up at 104,000. Okay, this is another one I may think about going into. As I said in the December version of this video, the new administration is very pro Bitcoin. A lot of businesses, which means a lot of businesses will be pro Bitcoin. I might take a small portion and invest in that. Now, when I say a small portion, I mean a tiny part of my overall portfolio. You don't want to go crazy on this. Okay, at least for me, a conservative investor, what am I looking at? Less than 1%, definitely. Just to try, dip my toe in the water. I may do that in the very near future. If I do, I'll let you guys know. And finally, I have 2 retirement articles that I will post down below in the description that I thought were pretty interesting. One is from Yahoo Finance. It is called the single highest correlation to retirement success. Interesting article. The other one I have is from Kiplinger. What's worth your time in retirement? I'll have the links of those down below. So there you go, guys. There is our what's happening in January in retirement. Again, leave me comments if you like this type of video. I think I'll keep doing it because the comments to last months were pretty positive. So there you go, guys. And as always, from the lovely high desert, I can almost see my van down by the river. We got this.